Support and resistance are absolutely foundational to your trading, and by understanding these levels and what they mean, you give yourself the best chance at trading success. Remember that Forex trading is risky and that most traders lose money. This video is intended for educational purposes only and it should not be considered financial advice. All charts displayed are historical and we always suggest that you backtest any strategy ideas on a demo account before you try them in the live environment. Hi, if you're new here, I'm Ali from FX Scouts, and on this channel we share all aspects of Forex trading to ensure that traders get the best start to their trading careers and that they're able to effectively manage their risk. If you're already a subscriber, thank you for joining me again and thank you so much for your support. Today I'm very excited to show you how support and resistance works and also how price tends to move around institutional price levels and how the big market players like the institutions use these price levels. And also watch till the end because I'm going to be showing you how to effectively incorporate support and resistance into a trading strategy. Enjoy. So a good place to start is with the basics, and support and resistance are basically areas where the market reacts. As you can see here, support is a price level where the asset tends to stop falling because there's enough interest to hold the price up, while resistance is where the price struggles to move higher because of selling pressure. As you can see here, you could think of support basically as the floor that keeps price from falling lower, and resistance as the ceiling where the price stops rising. And traders look for these levels because they often signal where the price may reverse, therefore providing good opportunities to buy or sell. So why are support and resistance so important? Well, when price reaches these levels, you'll often see a strong reaction in the market, and therefore it helps you to plan your trades. So if the price hits support, then it often moves up quickly, and when it hits resistance, it often falls. So these areas act as magnets where price is drawn towards them and either bounces off them or breaks right through. And traders use these zones to make trading decisions. So how do you identify support and resistance? Well, identifying support and resistance on a chart, as you might imagine, involves looking for key areas where the price has consistently reacted, either bouncing off a level or reversing direction. So to do this, you're going to use historical price data. So you're going to look at a price, as you can see here, preferably on the higher time frames, like the 4-hour, daily or weekly charts, because these provide much more reliable levels. If you look here, this is the Euro USD on the weekly time frame on TradingView. And I am basically going to look for the strongest levels of support and resistance. And as you can see, I've taken all the way back to January 2020. And this is basically to ensure that I'm not missing any important levels. And to identify these levels of support and resistance, I'm basically going to draw lines at the swing highs or the peaks on the chart where the price is reversed from moving from up and then reversing down. And these levels obviously form resistance. And I'm also going to draw it at the swing lows or the troughs where the price is reversed from moving down to moving up. And of course, those are your support levels. Now, very important to note that the more times the price touches that level or reacts to that level, the stronger the level is. So as you can see here, if a level has been tested multiple times without breaking, then it's considered more reliable. Once I've done that on the weekly time frame, I go down to the daily time frame. And as you can see, this is between 2023 and 2024. And you can also see that there are some very clearly defined levels of support and resistance. And one thing I just want to mention here is that support and resistance aren't specific lines or points on your chart. You're not going to get them exact. They're not precise points. They're basically zones. So you may want to draw like rectangles or zone areas to mark these areas. And it's common for price to come near the level, then slightly overshoot or undershoot, as you can see here. So you really want to think of it as a region rather than a precise point. So when looking at price action, I also focus heavily on the support and resistance created by psychological levels, or as many traders know them as institutional price levels. Some traders also call them whole and half levels or whole and half dollar amounts. So they're key zones where big institutions often place large orders, and they often place them at round numbers like the 1.000 levels or the 1.1000 levels. And these levels act as magnets for price, like support and resistance, but much more strongly, and they pull it back towards them due to the large liquidity at these points. And it's also because these numbers are much easier to remember than the points in between the whole numbers. Now, support and resistance and institutional price levels, or IPLs as I'll call them, all share something very important, and that is that they're areas where price reacts very strongly. And if you know that institutions place their orders there and that the institutions move the markets, then it would be wise for you to do the same and ride the same price action. Before I show you an example, I just want to show you how to set up IPLs on your chart, because I think this is very useful. So I'll click on the indicators tab over here, and as you can see, it comes up as institutional price levels. It's actually a community script. And there you have it, they appear on the chart. I'm going to change the settings of the IPL slightly, so I just want them to extend a little bit further. So I'm going to extend them to 200 candles on each side of the price, so that it's clear. And then I'm just going to remove the quarter levels, because for simplicity, I only want the halves and whole numbers. Okay, so this is the pound-dollar hourly chart, and as you can see, price tends to respect these levels of support and resistance. So it often bounces off these levels. So let's say that price is falling towards a support level after a strong selling pressure through the 1.3330 level, as you can see over here. And it's heading towards the 1.3250 level. Now, if we see bullish price action at this level, like a rejection or a bounce, then it basically signals that the buyers are stepping in over here and that it makes it a potential area to buy. So that's basically how IPLs work, very similar to support and resistance. In fact, the same as support and resistance, but they're just very strong magnets of price. Now I just want to show you a simple strategy that combines support, resistance, and IPLs. So I first go to the weekly time frame, as you saw earlier, and identify these levels near my price action. And you saw me do this earlier, so that's what I've already done. Then I go down to the daily chart, see if there are any extra lines that need support and resistance zones. And then, of course, I go down to the 4-hourly chart. Over here, I'm going to add my IPLs, as I showed you before. As we can see here, price is headed into this support zone and headed towards the 1.1 IPL or psychological handle. Now, I don't place any trade until I see that price rejects both the 1.1 level and breaks out of my support zone with a very strong bullish signal. And we wait for the close of the candle before we enter the trade. So at this point here, I would set my stop just below the recent IPL, which is a good place for that stop. And I set my take profit at 1.5 times my risk level, or at a level of the previous swing high, which you can see here, whichever comes first. And they're actually pretty similar levels. And as you can see, the trade plays out very nicely and it hits that level. Now, of course, it's very important to back test the strategy if you are going to use it, and just notice how the IPLs and support and resistance work together and how price is attracted to those levels and then what happens at those levels. So now, while the strategy is effective, there are some common pitfalls that you want to avoid. Firstly, don't assume that price is always going to respect these levels. Trading isn't perfect and price can break through support, resistance, or IPLs, especially during volatile markets. So be aware of any news announcements that are released during your trading session. And what I often do is wait for price to react at those levels before jumping into a trade. Wait for the confirmation, basically. And most importantly, please prioritize your risk management. Always set a stop loss and have a plan for each trade and how you're going to exit that trade. Thank you so much for watching. If you enjoyed this video, please like, subscribe, and drop a comment below. And I'll see you in the next video.